Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading. We're going to attempt to navigate us through the rocky markets that we're seeing because of Omicron, the new coronavirus variant. So, we're going to do our best here in the weekly watch list video to go over all the major indexes and see where there's going to be possible support buying of the dip, and try to make those educated, higher probability decisions, because you don't want to be buying something like a falling knife and then it just keeps going and going and you hold it, hoping that you get that bounce. We just don't know yet enough about what is going on with this new variant. So the markets don't like that. Like I said in my other video, the markets hate uncertainty. So there's a lot of restrictions being put on travel right now from all the major economies. So that is not a great sign. But that being said, we're still going to go over, to the best of our ability, where we think the market is going to go. My market prediction, like I do every single week. And that's what we're going to do here in a second. So first, I just want to share with you guys our Discord. If you're interested, it's $99, one-time payment. That's it. And you're in for life. A very, very good group here. A lot of great information, a lot of great calls. We've had some, traders in here absolutely knocking the cover off the ball this past month, especially. Really doing well, even in the market downturn, being able to make money, even in big sell-offs. So this is really good. 99 bucks, like I said, if you're interested, you could join that. It's in our description. And, getting to some of the economic data coming out this week. Okay. This week is NFPs on Friday. This is our payrolls to see how many jobs were created, the unemployment rate, and that's all going to be on Friday. On Tuesday, you have the consumer confidence index. On Monday, you have pending home sales. So you have the beige book on at 2 p.m. on Wednesday. So you have an action-packed week as far as macro fundamental events that can also move the market. Now, the biggest event right now is obviously the new coronavirus scare. I mean, it's that simple. We could do the best technical analysis in the world, but when you get something out of the blue, like I said, what the market is not prepared for, sometimes that can destroy charts. It could destroy technical analysis. And you just have to deal with it and make some informed decisions. Now, the only thing I have to say is if we're looking at the SPY here on a daily chart, it was very obvious, even before this big drop, it was very obvious that there was very little institutional buying in the past couple of weeks. We hit new highs, which just so happened to be this resistance trend line. We sold off a little bit, started to get back, and made new highs on 11/22. And this is key. On this day, we pushed up to new all-time highs and then immediately rejected. That just goes to show me that there's institutional selling up here. There's no buying going on. So what we were expecting and what I called in our last weekly watch list video is the potential for these types of pullbacks. So while we weren't going to expect, obviously, an 11-point move or so on the SPY, which is you know, pretty crazy. Let's see, from highs 69. Yeah, so a little bit more than that, a very big drop because of the variant. But I was starting to notice a lot of weakness happening up here. And that's what usually happens when you're at the top of a channel. Usually the market has pulled back each time to this line here, which is the 50-day moving average. So the 50-day moving average on the SPY, which is the S&P 500 ETF, sits at 451.48. We're currently at 457, I think, after hours. Yeah, so 457. So we're currently sitting right about here. And then if we look at the RSI, dropped off a cliff. Previous times that we bounced off the 50 moving average, outside of this bigger correction here, was this green dotted line. So you have about 42 on the RSI, 40 on the RSI, 41 on the RSI, 41 on the RSI. You get it. You get the point. We're currently at 45 on the RSI. If we're going to bounce off of the 50 moving average, there's a good possibility that this green line here that I drew out at about 40 to 41 on the RSI might see a bounce. You can see these very big bounces every time we hit this. So if you want on your charts, on your daily chart, put the RSI in here so you could get a good gauge of where we've seen previous bounces. And that would be right around the 50 moving average, which you should also have on your daily chart. So that's the SPY. Going over to the Qs, this one also has been very predictable to us right here. I mean, if you look here, you're in a very clear channel that goes all the way back to April, okay? Hit up against it here, went back down to the lower trend line, ascending trend line that has been absolutely key in this entire market run up since March. Right up to the top, right back to the bottom, right back to the top. The only thing I can see here very clearly, the last time we hit the bottom, so back in May, before this time in October, we went back to the top here and then had this very similar price action that we're seeing here. So we came up to it, dropped back a little bit, went up to it again, and then dropped back to it just under the 20 EMA, which is where we're sitting right now. Very similar since we came from the bottom to the top. We had a pretty decent sized sell-off. Let's see, just about 4% we sold off there, and then rebounded pretty quickly to the top again. So we came up to it here, dipped, back to it here, a bigger dip, which is what we're seeing here. And, you know, does that mean that we're going to follow this and next week we're going to start to see strength on the Qs? Not necessarily. I'm just showing you guys a pattern that has happened before in the past. So, you know, what happens in the past doesn't mean it has to happen again. But, you know, you can see very clearly the top of the channel for the Qs and the bottom has been very, very accurate to say the least. Now, from our highs to our lows here, at about 408, that's a 5% pullback. A lot of these 5% pullbacks on the Qs have gotten bought up. So we're going to have to watch that coming into next week. We're still elevated over the 50 moving average, but the 50 moving average on the Qs is a little different than the 50 moving average on the SPY. The 50 on the SPY has really been respected for the entire year plus, until that recent correction that we saw about 6% or so. a month and a half ago. So, we're going to be monitoring this as well. I want to see if we get some similar action that we've seen here. And the RSI, which I showed in last week's video, was very similar acting. You're over it here, overbought. You got that V. Same thing here. You're overbought here. You get that V back to overbought, and then you sell off a little bit. This sold off more than back here, but you can see here we've made lower lows as well. So this is all coming from the bottom end of the RSI. So right now we're currently sitting at 50. 50 in the past. It has seen some support. We'll see if that happens again. This coming week, I think a lot is going to depend on a lot of, outside issues that are going to be pretty difficult to call, depending on the variant and everything else. But in the past, we have definitely bounced. So this is the Dow Jones Industrial. This would get hit the most if a variant like this, stopped travel, stopped, these types of value stocks, the hotels, the cruise lines, stuff like that would definitely affect the Dow Jones. And you can tell here, it has been selling off for the last 2 or 3 weeks. So this is nothing new, but we gapped down below the 50-day moving average. And a huge drop on the RSI to 33. The only times so far since, let's go back a little further, since November of last year, we have only gotten this low 2 other times. So is it a big deal? Yeah. Whenever you're making, new patterns, stuff that you haven't seen before, or just haven't seen it as often, that has to give you a little bit of pause. Okay. So we're going to want to see what happens here next week. You got the 200 moving average here. It hasn't even been touched, all year long. So you're starting to see some weakness. I mean, we've been seeing weakness here for the last couple of weeks on the Dow Jones. So that's our major indexes. A couple of things with this variant that maybe you don't know yet. I'm just going to show you guys. Hang on 1 second. Okay, it's not there. Some of the things that you're going to see are new news coming out of the variants showing up in different countries. So I see here, I have another screen on the side that the cases of the new variant have just been detected in the UK. You're starting to see more and more countries, identifying this new variant. If it takes over and pushes Delta out of the way, we're going to have to see if the vaccine makers and the vaccine itself is effective against it. So right now, Pfizer is taking 2 weeks. They have the data. They're going to see how effective their current vaccine is. If it's not going to be very good, they can make another one. That takes time. Moderna, the same thing. They're currently working on an Omicron booster, just a shot for this new variant. Once again, it takes time. This is months away from actually getting into people's arms. So you have to look, what is going to be the near term, things that governments put on, restrictions or, social distancing, masks, all this other stuff. What's going to happen with schools? If the vaccines aren't effective, you have to monitor hospitalizations. And in the state that I'm in, New York, we just got a state of emergency was just put on by our governor, which I think it's the only state in the entire country that put on a state of emergency. So, pretty wild. A lot of developing things that are currently going on right now. And the best we can do is just, keep your eyes and ears open. So, I'm going to end with a couple of picks. Not that I love the picks because the overall market is a little difficult to currently, give my best guesses. But here you do have what looks to me like a pretty obvious head and shoulders pattern with Mara. So Mara is a Bitcoin miner. It follows Bitcoin a lot, so it's tough to trade. It's tough to know where Bitcoin is going. So, do with this as you wish. But this is a shoulder, a head, and another shoulder forming. If it breaks the neckline here at about 47, 48-ish, maybe it's possible that this goes down and retests, the 200 moving average. It could do that. Or if Bitcoin just decides to take off like a rocket ship, maybe it can rebound. But for me right now, this is a head and shoulders pattern. We'll see if it breaks the neckline. If it does, I'll be getting into puts on Mara. One that I still like is CLF. We made a little bit of money on this last week because it bounced very nicely off of this trend line. This trend line that's been going back since the beginning of the year. A lot of support here and support here. We bounced off of it again on Friday in very weak trading. It was down 4%. So does this provide you a good entry? It's possible. It depends on the overall market. It is at support, but can this break here now, especially with the variant? Yes, it could definitely break here, go down to the 200, and who knows, maybe even further down. But this is on our watch list. It's going to be on my watch list still to see if we could get that bounce continuing like we have seen all year long. So that was Mara. That's Cliff. What else do I like here? Let's see. This is a shipping company. It's also a very clear bullish trend line. So let me just take this off for a second. Very clear, making higher lows, making higher highs. So if we get the pullback, and I'm going to do right now, I'm going to set alerts here for just about, I'm going to set it at 50. Let's go 50, 50, at or below. And I'm going to create my alert here to see if I could get a good entrance right around the trend line for the next leg up. So they have been killing it. I mean, you could see here their earnings, $12.16 a share. But with the shipping and now the new COVID variant, we just don't know if it's going to, snarl up those shipping containers and stuff again. But they are in a great business for the current demand that the world is seeing in supply. So, this one can continue very easily along this bullish trend line. And I'm going to be looking for a good entrance. That's why I'm setting my alerts right here. Let's see, what else was I looking at? So PayPal has absolutely sold off, but at 180, I see some support that maybe we can finally start looking for a reversal on PayPal. I'm going to be setting my alerts here as well, doing that right now so that I don't forget. And, you know, if these alerts go off, I could always see, you know, where it is and what's going on with it. Because you can't monitor everything all at once. Very difficult to do that. So I think that was it. Oh, Facebook. So Facebook to me is still very much in play. Let me just put this back on. Support around the 200. This to me looks like a low risk entrance here. And I'm just going to set my alerts on this one as well. Okay, that's perfect. At or below. All right, so we have our alerts set there. I'm going to be looking to see if I can get a good entrance and then maybe ride that back up to higher highs, because that's what we've been seeing. We've been seeing higher lows, higher highs, a very nice reversal going on here after earnings. So I think that's going to be it for me. I hope that this video didn't go on too long, but there was a lot to get to. So hit the thumbs up for me. I do appreciate it. And I will see you guys back on the next one. Take care, guys.